Good afternoon, everybody, and welcome to Retirement Trades. I am back at home base again from my travels, so things should be back to normal. Anyways, let's not waste any time. Let's take a look at the markets. All right, we're looking at the SPY, and look at the gap up this morning. That's huge. That is a beautiful thing. Look at this. We're up almost $600 on the account for today, or I should say we've reduced our losses by $600 today. That's incredible. I'm excited. This is what I've been waiting for. Okay, we're looking at the positions, and let's see, Carnival here. What's Carnival doing? Carnival's close to 22. We're out almost 2 months on that one right there. So that's should be easy enough to accomplish that task there. What about SOX? That's the other one we were kind of in the hole on here. SOX is a little over 21. Look at the chart on that today. All right, yeah, they gapped up too and running near the tops. And Carnival, let's look at that chart quickly. Oh, Carnival gapped up a little bit today, but kind of struggling here. Is that due to the earnings news? Remember last time we talked, I mentioned that I didn't look into the actual Carnival news, but I figured it was kind of like pretty much what was expected because the stock didn't really move violently in either direction. So I still have not had time to go look at the earnings report and see what happened, but I need to put that on my list of things to do. Okay, the elephant in the room is AMD. Where are we here? I mean, let's see. That's January. Well, we pushed this out 2 years almost. Look at that. I mean, profit since open $615 on that. If you remember, it was just last week we were over $2,000 in the net liquidity over here, and we're down to 1792 now. So realistically, we can get this down $800 more dollars. I know that sounds like a lot, but if we can get that down $800 more dollars, we're free and clear on this trade. Now at that point, we're going to decide are we going to hold it for the length of the rest of these AMD positions and try and make a little profit to help offset the poor man's covered call that has not worked out as planned because I screwed it up from day one. But anyways, let's take a look here. I get a little confused at these things here. If you guys know more than me, and I know some of you definitely know more than me, explain this to me. Okay, so the whole idea is to sell a call way out in the future, which we did. September 19th, $115 call, and we're pretty much going to be approaching that soon here. So I can understand why this has lost some money because, well, I want to say AMD was in the 120s when we bought it. So we've gone backwards on that dramatically and we're crawling our way back. But now these calls that okay, so I bought this call and I sold calls against it. Now, as these calls start to appreciate, as the calls start to approach the strike price, their value, the premium. No, wait, I need that to go the other way, don't I? I'm confusing myself, and I just got back from a long weekend. So, okay. So basically, the calls are we've sold these calls, so we want the strike price to remain below the strike price, so we don't have the shares called away. We lowered our strike price on this one to bring it down to collect some premium about 2 weeks ago, I think, and I think we need to start considering rolling that back up a little bit because we certainly do not want to get our calls, our shares, our pseudo shares, our poor man call shares called away and have that position close on us prematurely. So we need to try and ride this out, not all the way to September, but we may end up having to ride it out closer to September because of the unexpected downturn in AMD pricing that we experienced immediately after getting involved. So normally, I think I would want to be out of this poor man's covered call position with, 45, 60 days left on the time clock, but I don't think that may not happen this time. But either way, we definitely do not want to get into the money on this AMD at 115 when our our call's at 105 now, right? No, our call's at 115. So basically those two null each other out. So we need to have some sort of a gap, a $5 or $10 gap between the call we bought and the call we sold so that we are allowed to make a profit if the underlying moves in the direction it should, and or the direction we're hoping anyway. So all right, so let's do that. Let's just see what opportunities are presented if we want to roll this up. Probably try and bring that back up to 120 at least, which right now would be a $1.89 debit. We can push that out because we're looking at the April 17th right now. Let's go out. Well, two more. Okay. Go out to May 2nd, gets us closer to break even. What about one more? Ooh, look at that. May 16th gets us up to $1.40 credit. I like credits. So that's May 16th. What's the next step out? May 16th. Okay, so the next monthly. But that's a $3.35 credit. I like that. I think I'm going to take a chance on that one there. See what we get. All right. Well, that works. Let's see what else we can look at here. Let's look at the overall position of AMD, where we're at here in the last, let's just go for the full year. We haven't been in the position that long, but I don't want to do the math right now. Okay, so total, we are, for all things considered, down. So let's see. This option position, we're up 322. This option position, we're up 137. This option position, this is the flubbed. I bought the call and then I sold. I should have sold the call, but I sold a put. So that's the one we monkeyed up on day one, and so that we're down 259, or excuse me, 2259. So that's no fun. And then this other position here, we're down to 145. But our overall for AMD since we got involved is down $1,940, we'll call it. And that is basically 20% of the entire account here. And unfortunately, it's tying up about 45% of our buying power entirely. So, all right, let's go back into this here. Let's see what we got to do to make this work. Well, let's come down a couple pennies, see what happens. 333. Let's just see if we can push that through. Somebody will bite on it, right? No? There we go. 333. We have just collected on rolling that AMD out and up. So let's take a peek at the spreadsheet here. AMD, that was the 115 call we had. We're rolling that. So let's see. And today's date, and pop open the email here real quick on my phone and see exactly what we spent and what we collected. Okay, so buying these shares back, it was negative 407. All right, so that is a $310 loss right there, increasing our closed positions totals lost to 864, but we have now also opened, all right, sold another call today, and this is going to be for the 620. Okay, so let's see, bring up 620 here in the calendar. And that's that 115, one contract. And what did we collect on that? $7.40. So that is, even though our closed positions, oh, see, when I add this in here, it looks like it went down to just being negative 124. That's because I have this column set only to calculate when one of these positions is not empty. So, okay, so far on all of our closed AMD positions that we've either closed or rolled, we are down $864. But what do we have hanging out there in the balance? We have this position here. Oh, no, excuse me. I'm going to, bear with me, guys. I'm going to Control Z back out of this stuff because there, I actually did the wrong one. I apologize for that. This is the one we rolled today, right? The 10, no? All right. What did I do? I had that right. God darn it. All right. So let's just do it again. Bear with me. It's negative 407, I think was that number. Back over here, we sold a call for 620. Oop, one too far. And that is the 115 strike one contract, and we collected 740 on that. All right, so there we go. And then this is our new open position. So we have 4 positions open. We have the original long-term call that we bought, and we have the accidental put that we had sold against that. We have this 125 call sold against it. This is sold against either the long-term call we bought or the put we have sold. Either way, those offset. But anyways, currently it looks like we're down $864 here. But if you consider we're sitting on, have collected a 740 premium here and another 186 premium in there, those, if we're able to just ride those out, we'll offset that easily. And then we're just back to the original mess we had started. So, all right, so let's go back to seeing what else is happening here. Anything that needs our attention should not be on a day like today because we have extrinsic value going on and everything here. We're good in that way. No time pressing matters. The SOXL here is not due until 39 days, and we're definitely out of the money there. This one here, we're still almost $5 in the money. So I think I want to say I think that the semiconductors are going to be coming back to life here just a little bit. And we've only got to get up here. We probably don't even need to get all the way up there. We can probably get most of the way up there and sell that for a good percentage of profit, not an entire profit, and call that good. So, all right, I think that's probably about it for what we're going to do for managing the account today. We're starting to accumulate just a little bit more buying power. I guess we could take a quick peek at the shopping list here and see what's going on. If anybody's made any moves that are attractive enough to tempt us into getting involved. Let's see, Nokia looks like running that top Bollinger, pulled back a little bit, did not get back to the midline. Not that that's a requirement. These, again, remember, this stuff here is all sort of guides. None of it is set in stone, but you want to take these factors and look at other variables and make decisions from there. I do like to see this. Right, it's on an upturn here, which means Bitcoin's doing well. I think I want to say I looked earlier, it was about 88,000 again. That was good. Upworks on a nice trend. And again, we probably missed some of these potential rides due to the fact that we were not looking good in the buying power area here. What is this? Yeah, okay, that's Mara jumping up there quite a bit. Beautiful. Vesco, oh, nice gap up there today. See what happens here when it gets to the midline. We may want to observe that. If it turns back down, we may want to sell a put towards near the bottom Bollinger. How's Levi's doing? Levi's is surprising. They're having a little bit of a red day while the majority of the market's having a really good green day. So when I see things like that, I get really curious. I'll probably have to try and see what's going on with the news. If there's any analysts changing their numbers or something happening there. Vishay, what do we got here? Vishay is same thing, approaching. You can see it approached and held at that midline, pushed back up to the midline, see where it goes. It tests these a couple times, and then I get more interested in getting involved, because if it just keeps testing it, there's a fair chance it's going to want to break through to the upside at one point. So, all right, gold is down. Why is gold down? Because everything else is up. That makes sense. Okay, SOXL we looked at. Let's see, Carnival we've looked at. Just going down the list in order here so I don't accidentally miss something. How's our good old friend Intel doing? All right, so wow, missed this big run. Look at that, it retreated almost all the way back to the lows. Then a massive gap up, a little struggling here in the upper end of the Bollingers, but very, very interesting activity there. Let's zoom out a little bit and look at it in the grand scale. Well, you look at it out like that, it's not all that impressive. You can see just real tight consolidation, getting a little looser, might be getting ready for an explosive move. I mean, this was an explosive move. This is obviously an explosive move with the gap, but if you just see the way that this is just kind of getting wider and wider, and if you look at, let me close this here, you can tell, it was way up here, and this is only a 1 year view. Yeah, I'm going to keep a close eye on that again here. Okay, Sony is just up and to the right, as they say. I kind of wish I owned some of that there going back, but I did not buy it. So keep it on the radar. Oh, Pfizer. I like my Pfizer. You guys know that. That's tight consolidation here. Realistically, if you wanted to swing trade this, could be probably be done between the 25-26 mark and 26-27 mark. Just a little, clip little pieces off at a time. Okay, AT&T, couple big pullbacks. Definitely steadily hanging in between the upper Bollingers there now. Silver's going to be down because everything else is up. Okay, Celsius. All right, that's ramping back up here. We got involved. We made a little money, I believe. We kind of got depressed when we missed this gap up, but that retreated right back right away. Keep my eye on it, though. That's one I would not mind owning for the long term, and maybe a larger account, because the pricing is definitely getting up out of what we can afford to do here. HIMS again. We've been outpriced on HIMS on this account. We got involved back here, made some money, but then it got out of our league. Another one I really need to consider looking at for my bigger accounts, SMCI, some more Supermicro semiconductors here. And well, that's just a consolidation pattern here with the rest of the semiconductor business. But let's zoom out. Yeah, I mean, this may very well have been the bottom. Might just be in a consolidation phase here before it jumps up. We'll just have to wait and see. But I don't think anything there is tempting enough to get us involved today. So I think that's it. You guys hope you had a great weekend. I know I did. Enjoy the rest of your Monday, and I will catch you all on Wednesday. Don't forget to like, share, subscribe, and hit the Discord link in the description below.